right. Hey, what's going on, everybody? Chris Franks with Texas West Capital. It is Friday. So we got our market breakdown show here. And man, oh man, God, if y'all have been on social media lately, it has been a cesspool of nonsense. I mean, it seems like the only thing we can see on there now is everybody saying it has to go up or it has to go down. That's it, right? And everybody claiming that whatever they're saying, whatever they're doing is alpha. It's not. Most of what's on there, guys, in case you haven't figured out yet, is noise. There's no real signal. But very little of it anyway. You've got people on there saying, oh, well, this one time things happen this way, so it should be that way this time now. One of the things I've tried to do over the years here is help y'all get out of the nonsense, get out of the noise, think through it a bit more, be a bit more clear. And hopefully I've been doing that, but, I'm going to continue to do that today here. Recently had I'll be nice here. I'll say a discussion with a trader there on X. And, this guy has been posting this Wyckoff distribution schematic, and he keeps pushing it like he figured out Wyckoff, right? And so I pointed out to him that the way in which he's using a training aid. That's all it is. The schematics, in case you guys don't know, they kind of show the price action and they got some labels on it. And those schematics are used when people are first learning Wyckoff to understand the phases and the labels. They are not meant to say this is what it's going to look like. Now, sometimes it may look like it, but here's the thing. Often your accumulation or your reaccumulation and your distribution look very similar, if not exactly the same. So it is that volume part of the analysis that is required for the Wyckoff method that actually differentiates between distribution and accumulation. The other part of it, as Wyckoff taught, and as those of us who teach it continue to teach, is you're not trying to predict. That's not what it's about. The Wyckoff method is about reading what's going on and letting price action and volume tell you what may be happening, right? So it's not like, okay, there's a drop below range support and all of a sudden it has to be bearish. All of a sudden it has to be distribution, right? But here's the thing. These people, like this individual, don't understand this. And they post these things up there. And so if you don't understand this, you're going to look at it the same way they are and go, oh my God, yes, it's just pattern matching. That's all it is. But it's not, right? And because it's not actually pattern matching, what that ends up doing is it loses you a lot of money over time. Because then whatever your personal bias is, fits that pattern to reinforce your personal bias. That's the thing, right? Here's the thing about patterns, guys. And I say this because there's a lot of patterns. There are people showing patterns all the time on social media with the price action, with the charts. And they say, okay, well, it looks like this. So then they go back, they go back in time and they find this other time where that particular pattern was either bearish or bullish, depending on whatever's in their head. And that's what they show you. And when you don't know any better, it seems to make sense, right? But it's cluelessness. And the thing about that, the reason why I'm trying to get this across to you guys is because what that tells you then at that point is they don't know a whole lot more than you. So why in the hell are you following them? Why are you wasting your time? And again, I say this because that's an extension off the beginning, which was most of what's online, especially in social media, is just noise. It's nothing that's going to help you. And in fact, most of the time it's going to hurt you, especially if you tend to follow a whole bunch of people and you're getting a whole bunch of different viewpoints. And again, you don't have the experience or the education in the market to be able to decide what's noise and what's signal in that. It's tough. It makes it really tough for you as a trader. My goal here is to help you. Yes, I want you to join TWC. I think we've got a great thing going. I think people are just absolutely awesome in there. And Our students have learned a lot and have, turned things around for themselves, right? And you can too. But even if you don't do that and you're showing up here, my goal is hopefully to at least get you to start thinking beyond your initial knee-jerk reaction thoughts when it comes to markets and when it comes to trading and when it comes to investing and stuff like that. Because those things that you think are the same thing that everybody happens to think when they first come into the market. How do I know? I've been doing this 30 years, right? I've talked to tens of thousands of traders over that time. I myself thought the same things when I first started back in 1995. I realized that makes the time I've been trading longer than y'all, some of y'all's ages, right? Y'all have been alive for less time than I've been trading, right? I only bring that up as a chuckle because I had somebody the other day that's in TWC and has done really, really well. And he's like, man, you've been trading longer than I've been alive, which is kind of crazy to think about, but it is what it is, right? And that's part of what what I'm trying to do here and share this experience with y'all. Because right now is a really critical point, right? You're in here and you buy Bitcoin or Ethereum or whatever shitcoin you're buying, or you buy stocks, right? With the hopes that it goes up immediately. Tell me I'm not wrong here. You guys hope that when you buy it, it goes up immediately and it never goes back below your target, right? And your hope is always that, oh my God, if there's a top, I hope I recognize there's the top so I can get out at that top. And I hope I do, right? I mean, this is the way it all starts for all of us. The real difficult thing for you as traders, with social media being what it is and whatnot, is you fall into the I'm searching for signals like buy here, sell here, without the requisite knowledge and experience that you need to understand how to apply those signals. We've tried to do a few things like that in the past. It doesn't tend to work out too well. Which is why what we focus on at TWC has always been, and continues to be even more today, is the understanding of how markets work and why they work the way they do, so that you can understand where liquidity is likely to show up. Even if it's blue sky territory, where is liquidity likely to show up in that blue sky territory where price has never been before, to help you understand where you may be looking to take some off the table or get out of your position and whatnot. But the other thing we spend a lot of time talking about is market psychology and trader psychology. And to me, these are even more important, because any monkey can be taught how to enter and exit, where to enter and exit. I mean, that's not a difficult thing, guys. Listen, trading is simple. It's not easy. It's simple because it moves through liquidity. That's all it's doing, is moving towards and away from liquidity. It's that simple, right? But it is difficult. It is not easy because you have to fight yourself. You have to fight your psychology. You have to fight your emotions that you're feeling. And that becomes difficult in a day and age of social media, where you're being fed, your feed is curated to you based on what the algo thinks you want to see, or based on what the algo thinks will make you engage more, right? It's not there to show you what's really truthful. So again, going back to this, to this individual, the last thing they said, and they couldn't get through, right? They like immediately got defensive because price went down, the way they were saying, what they thought was going to happen. My argument wasn't with that. My argument never said you were wrong or oh my God or whatever. My argument was, listen, you're using a training aid, a Wyckoff schematic, and pattern matching and thinking that you did anything. You didn't. You guessed, basically. If that's what you based it on, you guessed. But if you can't recognize that, then what are you really doing, right? And he couldn't recognize that, right? He was arguing with me about how right he was that it was going down. And I'm like, but that isn't what I'm arguing. I'm not arguing that it didn't go down. And so he finally left with, the only thing that matters is calling the right direction. again, completely clueless. That sounds right, right? I mean, we're in trading. Ultimately, we want to make money, so it sounds right, right? It sounds correct to say, listen, the only thing matters is calling the right direction when price moves. But that actually isn't even, that is not the most important thing. It's not even one of the most important things as a trader. Successful trading is more than just one trade here or there. Successful trading requires a system, a repeatable system that gives you going like this, right? You can pattern match and guess and get it right once. You can get it right 10 times. That doesn't mean you're going to be a profitable trader or a consistently profitable trader. But again, this is the things that we discuss constantly in TWC. These are the things I try to mention out there on X and other social media to help you guys understand that it's not about your entry, your exit, whatever, and that's it on the single trade. It's always about the system. You have to think in terms of systems. If you don't, if all you're ever focused on is that single trade you're on, you will not be consistently profitable over any length of time. I can say that with a lot of confidence, again, because I've been doing this for 30 years. I've talked to tens of thousands of traders, both very successful and most not very successful, right? And I say this here for you so that way, hopefully it'll click with you and you stop getting caught up in the single trade nonsense and looking for signals. Looking for, oh, I want to buy here. Again, I'm talking when I talk at the beginning here, I said, most of it's noise, not signal. What I mean is it's not alpha, it's not actionable information. When I'm saying signals now, I'm talking about, hey, listen, buy here, target here. Because when we first come in, that's what we're looking for, right? That's what we're looking for. We're looking for somebody to tell us, where do I enter? Where do I get out? And magically, I'm going to make money. But it doesn't work like that. And if you're here and you're still thinking that way, you're going to get offended by me saying that. You're going to get hurt by me saying that, because all of a sudden it means what? It means you got to figure it out. But that's what I'm here to tell you. You have to figure it out. You will not get consistently profitable following somebody else's calls all the time. Because again, you don't have the education and the experience in the markets to effectively utilize that. To first of all, to even tell if the signal makes sense. Second of all, to even follow it correctly. Because most often, again, especially if you're newer and you don't have the experience and, dealing with your emotions and all this, guess what? Even if the call's good, you're probably not going to follow it, at least not fully, because your emotions are going to get in there and make you do things that you shouldn't be doing. Okay? Trading is what you make of it. It's not just because you can do it doesn't mean you're owed anything. And unfortunately, that's the way most people come in, and they end up losing a ton of money, and they leave dejected. They leave broke. They leave with nonsense like, oh, Wall Street manipulated me. Crypto whales stole my money. It's all nonsense, guys. What's been the big narrative here over the last few days? Oh, it's so manipulated. Who's manipulating this? Oh, Binance and Wintermute are pushing price where they want it to go. It's such a lack of understanding. First of all, Binance and Wintermute aren't sending price wherever they want it to go. Market makers they're not directionally based. They're trying to be delta neutral. That's their goal. They get paid to provide liquidity, guys. That's what they get paid to do, because if they don't, guess what? There's not enough money out there in spread out enough for everybody to get in where they want to get in and get out where they want to get out. So if you thought that Binance and Wintermute, because it sounds good, because it seems to make sense when people are saying this out there, that they're dumping the market and forcing price to do whatever, it's nonsense. It's nonsense. There's nothing on chain that says there's some effort by Coinbase and Binance and Wintermute and everything, and Kraken and everybody else to suppress price to push it down, right? It's just it's a lack of understanding of what the market is, a lack of understanding of options and futures, ETFs, spot, and how that all interacts and how big institutions use that. So if you thought that was what was going on, let me assure you right now, that is not what's going on. Okay. It's a retail way of thinking because they don't understand, right? They don't understand what's going on. So they have to make up something in their head to make it make sense to them. Now, the other thing is this manipulation thing. Oh my God, so manipulative, so manipulative. Let me tell you this, guys. Even if it was, you can still make money. I promise the last 2 of the last 3 days, when I did our updates for our students, for Bitcoin chart, I gave them 2 short-term trades, almost exactly where price was rejected. Our targets were almost exactly where price was rejected both times. I mean, it's not, again, trading is simple, but it's not easy, right? Even if it were to be manipulated, we still made money. You can still make money. But everybody wants to get out there. They want to argue about, how it's manipulated. They want to argue about narratives because that makes them feel comfortable. It makes them feel better to say, oh, well, Binance and Wintermute are screwing me over. That's why I'm losing money. No, you're losing money because you don't know what the hell you're doing. You don't know what you're doing. If you can't accept that, if you are a trader, right, who's new to markets, and by new, I mean you are not consistently profitable. If you've been in the market for 5 years and you're still not consistently profitable, you are new. You're new. You haven't figured it out yet. Now that's not a bad thing per se. I mean, it's not like, oh, you're new, so I'm talking down to you. I'm not. I'm trying to say, listen, recognize where you're at. Be real about where you're at so you can figure out what you need to do. I see too many people getting on here and they just want to blame everybody else and everything else for everything that's going on, rather than actually figure out what they need to do to make it work right for them. And if your goal is to be a consistently profitable trader, you absolutely have to do this. You have to get it figured out. So let this be your wake-up call. If you're listening in right now and you're feeling maybe a little offended by what I'm saying, good. Be offended. But open your eyes. I'm not saying it to hurt you. I'm saying it to get you to face the realization that you have to face so that you can be the trader that you want to be. I'm not here to blow smoke up your rear end, guys. Most of you are not going to make it as traders, and you're not going to make it because you refuse to do this thing I'm talking about. It's not because you can't. It's because you refuse to be real about it, to be honest with yourself. That's the first really big step you got to take. And most people never get there. They aren't there in their lives at any other point in their lives. And they're sure as hell not going to be there in trading. It's not magically going to happen in trading. I'm known for saying often that, these things I talk about with trading, as far as getting to know yourself and how to trade on the scene, right? They're applicable to every other area of your life. And they are. There's nothing special. Trading is not this special little magical thing that you do in this little dark room that has no effect on the rest of your life. The things you learn as a trader, as you become better as a trader, actually funnel toward the other areas of your life. Your brain can't do just, your brain can't be logical, whatever, in one area, and let's say in trading, and be completely opposite in the rest of your life. It doesn't happen like that. Your brain doesn't do that. So again, if normally in your life, if you're a victim, if you play the victim game, right? If you're always trying to find how everybody else is at fault for everything else that's happening in your life, that's going to bleed over into your trading. And I'm going to tell you right now, honestly, you will never become a successful trader. You can't. Because being a successful trader necessarily requires you to be honest and open with yourself about what's going on, because it requires constant tweaking of what you're doing. The markets change. The market regimes change. You have to tweak what you're doing to fit in with it, right? What do most people do? Listen, if you go and you lose money, and you lose money a couple of times, what are you usually doing? Most new traders are usually adding bigger positions, but that's not what you're supposed to do. Why would you increase the size of your position if you're losing? You get your next trade, a bigger trade. You get your next trade, a bigger trade. That doesn't make any sense, right? I mean, when I sit here and say it now, it doesn't make sense. At the time, it may seem to make sense. But what are you trying to do? All you're trying to do is compensate for what you lost, but you're getting in quicker because you did lose. This is most often the way that traders, work it out. And they end up losing more and more money, right? Your risk should be having you bring down your position size if you're losing money consistently, not increasing it. If nobody has told you, trading is about surviving the game long enough so that your edge produces results. That's what trading is. It's not about a single trade. It's never been. It only been for retail traders, retail market participants in their head, right? That's the only time a single trade has ever been the goal, right? But that doesn't work. Okay? Is this reaching anybody out there? Is this making any sense to any of y'all? We got hundreds and hundreds of people watching. Is this making sense to you? Because it needs to. It needs to make sense if you want to make a living as a trader. It doesn't mean you have to quit your job tomorrow. You don't have to be getting into trading because you want to quit your job and get a different job or not get a job at all. You may love your job, but you may just wish to have some additional money. That's fine. A lot of people, they would rather not deal with the nonsense at whatever their employer is, and they would love trading to replace that income, so they don't have to. Well, that's a great thing. I think that's great, right? Trading's never about the money. It's always about what does that money do for you. Figure it out. Ask yourself, why do I want this money? Because at least in your way, in your mind, as you're working your way toward this and becoming a more profitable trader, a more consistently profitable, successful trader, if you have a goal beyond just money for money's sake, what does that money do for you? What itch does that scratch, right? If you can do that, you've increased your odds of being more successful. Okay? But again, these things you're feeling, these things that you're thinking, maybe even the words you're cursing at me right now because you don't want to accept what I'm saying, these are the things we all went through when we first started trading. You're not special in that respect. And that's a good thing because it means, hey, listen, I don't have to define myself by my success in trading. That's the next issue new traders often have. They define themselves by their last trade. If they made money, they think they're a godlike, right? Especially if it's a good bit of money. If they lose even a little bit of money, they think, man, I suck. I'm awful. I'm a terrible person. But you don't define yourself by your trading. Trading is a thing you do. It's not who you are. Said as somebody who's used it to fund my life for the last 30 years, okay? So I'm not just speaking out of my rear end here. But there's all these little mental things that you're doing to yourself that's holding you back. That's the unfortunate part here, right? Now we're going to pull on the charts here in a minute, But I want to make sure that you guys are thinking through this. Because again, if all you're here for is charts and entries and exits, you might as well just leave the market because you're going to lose all your money anyway. The reality of it is you are going to throw all your money away. You're going to lose it all in the market. But if you start listening to this other stuff I'm talking about and you start taking that to heart and you start thinking about what does that really mean, and you start addressing it within yourself, now you've got a chance. Now you've actually got a chance. And guess what? Not one other person on social media is telling you this because they know it doesn't sell. They know very few of you are actually going to pay attention to it. What they want are eyeballs. What they want are engagement. What they want are you just going in there. And so in order to do that, they just give you buy here, sell here. They regurgitate the nonsense. Oh, Wintermute and Binance are manipulating you. I mean, it's God, guys, come on. You're better than that. Stop falling for that nonsense. Most of what everybody's giving you out there is noise. That's it. There's very little actual signal out there. I don't know how else to say it, you know. Again, I've been doing this for 30 years. I've been talking to y'all live here since what, 2018? So 7 years I've been doing this publicly. And again, I've tried a few of the other things, you know, to build up followers and whatnot, and it's not worth it. It's a waste. I would rather have people follow me that really are interested in trading, that are really interested in learning how to be real traders, rather than people that just want, you know, buy and sell signals, and they're all going to lose their money. I'm telling you, you're all going to lose your money if that's what you're doing. All right. So let me jump in here. We got charts here, right? We do have some charts. We'll bring up some here just to show you what I'm thinking. Bibble will be back at the beginning of the year. He is visiting family starting today for Christmas holidays there. And so let me see. I'm find my stinking thing here. So yeah. But he will be back there in a couple of weeks. Just so y'all know, okay? Let me see here. I gotta pull this up. I see y'all checking in. Good to see y'all that are here. I appreciate y'all coming in all the time. Let's get this over here. Bitcoin. Nothing's really changed, right? Overall, I mean, we are range bound right here. We're range bound here. Now, again, to me, it looks like 1, 2, 3, 4, 5. So that would be a leading diagonal. And then we'd have, you know, maybe A, B, and a C here with this slight dip here yesterday. You can see, look at how we're getting hit here. You see where this previous resistance was? Support? All the way across here. That's where we're finding resistance constantly, right? So we had this trade on Wednesday, and then this trade on Thursday that made us money. 2 short-term trades. Like I said, we were out right around where those targets were. Here we are again. We had a rally up again today, getting rejected, pulling back here. Now, what I do like is that the daily stochastic RSI has reset for 2 days so far into oversold. Now, it's not bottomed out there. So, you know, it could go further. But we do have that finally bottoming out there. Can't really see here, but if you look, you see that just small candles with large wicks, right? Small candle bodies, large wicks, volumes expanding through this area here. But really, we're not. I mean, we kind of just dip this one lower here. Everything else is right around the same. We're not really making any progress to the downside yet. Now, if we do, the first thing I'm going to look for is a sweep of this 83,871 area, this December 1st swing low. Look for a sweep that, if we can sweep that and rally back up to it, that starts looking interesting to me. But more likely than not, we would probably get a push down below this 80,000 swing low here. And what does that mean? That means my initial targets, this almost 76.9, 77,000 area, that's the monthly S1 pivot, sweep of this low down here at 74,000, and then 69,000. Those are my targets if we break down. But here's the thing. This is the sweet spot right here. If instead of breaking down below that 80,000 area, we break out with a daily candle, impulsively break out and close above this 94,070, that should indicate that the low is in over here. This is likely a 1 and a 2, and that has us going up toward about 110, something like that, 117,000 as we continue to push up higher. So, I mean, you don't want to be leveraging your mid-range. From this swing high up here, this range, your mid-range right here, there's no reason you should be any kind of leverage in this area, hoping that price goes up or hoping that price goes down, right? It doesn't make sense. Does that make sense? If you're listening in here, does that make sense? You want to get in here because you hope you're not going to miss the move, and then it comes back against you, right? So as far as Bitcoin goes, nothing's changed. Everything's still looking the same here. We still have the need to break out there. Until that happens, we can continue getting, rejected here. Now, can we get rejected? Well, sure we can. But trading is not about guarantees, right? It's about understanding how price action moves, understanding how structure develops, understanding how liquidity flows, and then putting those probabilities in your favor. But at no time are you guaranteed that price is going to do something. This is why proper risk management is absolutely so important. So that's what I'm kind of looking at for Bitcoin at the moment there. Now, Jurian Timmer, he is the director of global macro at Fidelity Investments, okay? He was originally saying that Bitcoin was going to outperform gold this year. And now he's saying, you know what? Nah, looks like the 4-year cycle's still in. And so 2026 is going to be a down year. I'm looking for probably $65,000 to $75,000 as a low next year. He thinks the entire year is going to be down next year and only get down. Now, I mean, here's the thing. Honestly, I'm looking at where we are right now at, just 85,000 or whatever. I mean, my God, if we're just going down 65 or 75,000 and that's it over the next year, man, I am planning for the year after. As far as getting ready to, setting up where I'm going to get my buys in and everything. It's just a stone's throw away, guys. If that's the case, we've already gone through the hard part, the rejection at 128, right? So even if that is true, oh my God, we're almost there. There shouldn't be a lot of stress going on. But see, here's the other issue. A lot of people coming in, they want to be fair weather traders, which means they only want to trade when the bull cycle is going. Anytime they think that the bull cycle's over, they leave. I mean, my God, what are you doing? Trading gives you the skills to make money in both directions. Why would you leave, half of your direction, off the table? Why would you leave, the bear market for a year or multi-years or whatever it is without trading it? You make a lot of money during the bear market that you can then deploy at the bottom of the bull market. Think about it. If you had traded down from 65,000 last cycle to 16,000. And then you use that money and put it all in at the low there, 16 to 20,000 on Bitcoin or whatever, and let that run up to 128. I mean, oh my God, right? It's not that difficult. But people want to be fair weather traders. They think, oh my God, if the market's going down, then everything's going to hell and it's negative and I'm not, I can't do anything with that. That's silliness. Trading something you get to do every day. And I'll tell you what, before crypto, it was, at best, you had futures. So you were about 5.5 days out of the week, right? Even though you had your hour of time each day where you couldn't trade, but basically it was almost 24/7, right? And then crypto came out and all of a sudden it's 24/7. You can trade every day. But guess what? Now you have the NASDAQ filing to do 24/7 trading. We have the Texas exchange, the Lone Star exchange there in Texas. That's, I guess within this next year here, supposed to be up and running. Their plan has been 24-hour stock trading. So, I mean, you have FX, right? Forex, basically 6 days a week. So you have the opportunity to trade pretty much every day of the week, right? Whether the market's going up or down. There's no reason to leave the market if you think a bear market's in. It's just more of a reason to trade even more. Not trade even more, just to trade more, but to be able to be in there and trade and take advantage. You don't have to trade it straight down. You can trade the bounce. If you're more comfortable longing, you can trade the bounces. You can long the bounces. You don't have to short. And you make a lot of money buying the bounces, but you just have to remember they're bounces until they're not anymore, right? I mean, over the last 2 days, we had what? $4,000 or $5,000 of movement, 3 days actually here, right? Boom, boom, boom. Easy movement. You could just buy those bounces into the resistance and you would have been fine. Okay. Ethereum. Ethereum to me, again, looks like 1, 2, 3, 4, 5 here. Based on the height of this, we've pulled back 65%. We do have this between this point here and this low here. We have higher lows with price. We have lower lows with the weekly RSI. I mean, that's bullish or hidden bullish divergence. That's continuation of the bullish trend, right? So we've pulled back more than 50%. We're just kind of hitting right here at this low volume node. Previous resistance as support. Bullish divergence set or hidden bullish divergence setting up on there. So we just want to get this to pop out higher. And if we can get this to pop out higher, you'll see last week we rallied up where? To where the previous support was. Previous resistance, right? Previous support. So if we can pop up through that, we should be good to go. What does that mean? Well, based on this being, if this is going to be a 1 and a 2 right here, you could potentially be getting in for a ride toward almost $10,000 without any overextensions on that, right? If this is a 1 and a 2 as a leading diagonal, and then this is a 1 and 2, well, guess what? That 5 waves up only becomes 1, 2, 3, which means then you'll pull back and then you'll break out higher for even more. Zoom into the daily. So daily, Ethereum's been doing what Bitcoin's been doing the last couple of days. You had the rally up and then the pullback and drop lower. Then you had the rally up yesterday and the pullback. Here we go, rallying up again today. Again, 3 days of short-term price action. This right here looks similar. Looks like it's 5 waves up, leading diagonal. 1, 2, 3, 4. It looks like 5. A, B, see here, WXY. So really, what am I looking for? I'm looking for a daily candle breakout above this swing high here, which is 31.75. If I can get that, to me, that says this is most likely a 1 and a 2. So locally, what does that mean? That means 1, 2 right there. That means 5 waves up around 43.91 without any overextensions. That gets us within a few $100s of the all-time high. Now, this could, wave 3 could overextend a bit higher. Wave 5 could overextend. You can get closer to the all-time high, but nonetheless, we're doing that, right? So we get 5 waves up, 3 waves on the pullback, and boom. And right now, from where we're at, structurally, what does it mean? Well, if we get 5 up there, we get 3 back to 50%. It's right here. Whoops. I just completely went off on my chart here. Right here, around this 35.77 area. Low volume node. It's at the top of the low volume node. Look at where we go. Look across. Resistance. Support. 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 I mean, so it makes sense. You know, if we can get it, it makes sense, right? It makes sense. Rally us up here. Pull back here where we had all the previous resistance support. And then take off higher up there, right? So again, I'm not telling you that the low is definitely in, but I'm saying if we can get that breakout above this 31.75 area, that to me, that's a signal that there's a good chance that's the low right there. And we're, you know, headed 5 waves up toward that 4,400 area, almost there. Let me see here. Bamboo says, what? He says, with all the economic data looking as it does, I have difficulties believing that Bitcoin is just 20,000 more to drop. If recession is coming, Bitcoin wouldn't perform that well. But I'm still in the camp that we have higher to go before something breaks, and then it'll get really ugly. One final leg down before the real breakdown. Man, Bamboo, you make me read a lot here, man. That will catch everybody off guard. Bears will have to admit they're wrong, and bulls will scream super cycle, and then suddenly the music gets turned off, catching everyone with their pants down. Yeah, but see, here's the great thing, guys. You don't have to know whether the top is in or not. If you are a trader, just trade. Trade whatever opportunities are in front of you. I think that's where most traders get caught up. They say they want to be traders, but what they mean is, I want to buy the absolute bear market low price and sell the absolute high bull market price. That's what you mean, right? Most people really don't want to be traders. They say they do, but what they want is what I just said. If you want to be a trader, there's no reason you shouldn't be making money, whether you're going up or down. There's money to be made. There's money to be made in the sideways price action, if you know what you're doing, right? I mean, you have to know what you're doing. You have to be more careful. You have to get an understanding of ranges. But oh my God, there's money to be made day in and day out as a trader. Most days. Some days just aren't good trading days, guys, and that's okay. But the other issue that a lot of new market participants have is that they open their computer, their laptop, their phone, whatever, their charts, whenever they want to look at them, and then assume they should be able to find an entry right then. No. Most of what you're doing as a trader is understanding your higher time frame points of interest and then waiting for price to get to them so that you can trade them. Potentially, right? You're looking for the reaction on the smaller time frame when it hits those larger time frame points of interest. That's what you're doing. That's what trading is. Trading is not, I'm going to open my chart right now and I should be able to find an entry. Nah. Because then you're jumping mid-moves. You're not waiting for confirmations. You're not waiting for better structural identification, structural setup. And that's what they do, right? I was there. Like I said, this is what I did, all this stuff, guys. Same stuff I did when I first started. But you have to get out of that mindset. You have to get beyond that if you want to be around for 5 years or 10 years or 30 years, or like Peter Brandt since the Stone Age. You have to change the way you're thinking, because it's your thinking that's holding you back. And I know that sounds cliche, but it's real talk. You absolutely cannot go on to be a successful, consistently profitable trader thinking the way you do as you do right now, where you're losing money constantly. Right? Doing the same thing over and over again, but expecting a different result is the definition of what? I'll let somebody type it in there. I know y'all over there jumping on Google right now, or ChatGPT or something. But that's what most people are doing, especially in the markets, right? They're doing the same damn thing over and over again, expecting a different result. They're not being honest with themselves. If you're not honest with yourself, what did I say at the beginning? If you're not honest with yourself, you can't look back and go, okay, where do I need to change things? Where do I need to tweak things? Where do I need to do something different? You'll never be able to figure it out because you're always in your mind. It's always somebody else's fault. Stop the nonsense. You are the reason why you're losing money. That's not, again, meant to be a dig at you. That's just meant to be reality. It's a reality check. Insanity, that's right. Doing the same thing over and over and over again and hoping that you get a different result is the definition of insanity. Yet most of y'all are out here every day recreating that insanity. And it's not because you're dumb. It's not because you can't do it. It's because you haven't done it, because you refuse to do it. You are keeping yourself from being successful. BNB, check out this volume. I want to bring this one up because, man, look at the volume today. Look at that volume spike on what we have here. We're mid-range. So again, if we're looking at this range here, bumping right up into that mid-range, and look at all that volume. That volume is 2 to 5 times more than all this other volume. The only volume that's been higher, and by the way, we still have multiple hours left before the end of the day, but the only volume since the all-time high that's been higher was the volume the day after the all-time high. I think. Or was that the all-time high? No. This volume was the all-time high. It was his first drop. Other than that, for 2+ months, this big, huge spike of volume suddenly is here. So it bears watching. This is demand showing up. It bears watching. If we can get some follow through on this, guess what, folks? It's starting to look like we might be headed up. Now remember, this is BNB. This is the one where everybody and their grandmother back here was all scared that it was going to break down. Remember, CZ's going to prison, Binance is getting taken down, BNB is going to drop through all this down here to like $30 or whatever, right? And there was my post. Would be a shame if price just cleared the path right here, right? And it was going to move about this. That was my warning. A little cryptic, but easy to understand. And what did we do? We rallied up from $225 up here at almost $1,400. All we've done here is done what? We pulled back previous resistance here, this all-time high. All we've done is pull back to there so far. Whoops. See there? And it looks to be in 3 waves. So, I mean, ultimately, I'm looking for a breakout above this swing high up here from where we're at right now on this larger time frame, for a breakout above 1182.60 to signal a new all-time high is probably going to happen. And Just a pattern target based on how I pull back, a simple pattern target, get you up around $1,700, $1,750. Locally, we can zoom in a bit here, right? Where's my, there we go, daily. So again, I'm interested right now with what's going on with today's candle. I want to see how this candle closes. I want to see, does this candle hold? Because if we can close like this or better today, this becomes a controlling candle. And we should think higher unless price actually dips a little bit below it. And then it'll probably come down here and sweep the low. But this candle right now is setting itself up, and it's right here where? Right here on this support right here. Got my thing on there. So basically it is right here. It's a pretty significant area. You can see there's this high volume ledge right here, just right we're trying to get through. Want to get on the other side of that. I'm definitely not hating it. I'm not guaranteed that it's going to hold, but man, when you see volumes have been very, very low, especially when you're going sideways, and all of a sudden you get a spike of volume near the, the bottom of that pullback, you should be paying attention to that because it's showing you that a significant amount of demand is showing up. This is your clue. It's not your clue to jump in blindly, but it's your clue to watch it now. Okay. Andrew's pointing out BNB on the 1 hour, a lot of that volume came in on one candle. So we zoom in the 1 hour there. Look at that. It's this one right here. I don't know if you guys can see it. This is a little doji, this 1 hour doji here. All that volume came in. Couldn't break down below, went up higher instead. And here we come pulling back to that same area right now. So we could potentially get a pullback into the daily candle. I don't know where it ends today, but maybe tomorrow and or Sunday. But we want to see this hold. If this low can hold, if we can keep price from closing below this low here at 822.38 and then get a breakout and a close above it, this is your support here then. And right now we're building a bullish engulfing candle on support with a huge spike of volume. I mean, these are the things, again, these things don't guarantee that price is going to reverse here, but the idea is to put the probabilities in your favor, right? And again, you had a downtrend into support. Now we're printing a bullish engulfing candle on significantly more volume. Any one of those things by themselves is enough to pay attention. But all three of those things together means you're silly if you're not watching. Okay? Yeah, there was a little candle. So what did that little candle tell us? Zeb? Look at what did it tell us? There's a tiny little candle here. Huge spike of volume. Doji. I mean, this tells us that supply was trying to push down, but demand was exerting its dominance, which again leads to the move up higher here. But this is significant. All that volume on that tiny little candle there on the pullback, and it prints a doji. You read this candle as supply was trying to push it down, but demand showed up significantly greater. It's a very important candle. But especially moving toward the daily here. So we'll see how this daily can complete, but man, oh man, I see there's no reason why you should not be watching that at the moment. Okay? But yeah, that's what you're learning, right? See, this is the kind of stuff that I teach day in and day out over the TWC Trading Academy, right? It's this idea that what is volume, right? Because A lot of people that you're going to follow online are going to be strictly price action, and they're going to try and tell you that's all you need. Those people are idiots. I mean, seriously, guys, listen. Price action tells you where price went, right? But it's volume that tells you the conviction. Volume tells you if where that price went means anything. You understand what I'm saying? Price action, all that can tell you is where price has gone. And that in itself is not enough. How many times have you guys been caught in a false breakout or a false breakdown? Raise your hand. Pretty much all of you, right? At least once. But let's be honest. Multiple times more likely, right? A lot of times. Because price action doesn't tell you enough. Trade that volume is what gives you the real intent. Think of it this way. Price action is going to be what you say out loud. Volume is what you mean. Why are you saying it? Are you trying to dupe somebody? Are you trying to be honest with them? Are you trying to get them excited? Are you excited? Or is it fake? But the volume is giving the reasoning behind, the conviction behind the price action. That's why price action pattern matching, really is so ineffective for most people. But once you start learning to add that volume in there, it starts making a lot more sense. Solana. Solana's interesting. So to me, again, looks like we've got leading diagonal. And we've got this pullback, right? We are range bound right here. We've kind of dipped below. We got this range. We're trying to hold support there. We're building bullish divergence at the low here on the daily. I believe the pullback here is it 78%? Let me see, 78.6? Or did it go below that? And I went a little bit more here. I went to 85.4. So I'm watching. No guarantees that it does, right? But again, look left. Look what it hit here. No surprise. It got the bounce, right? We are at the low volume node here. We want to see this follow through. It may or may not. But that's what we want to see at this point. We want to see this just print, a dip below here and a rally back up. Now, I don't like so far that we're not really going anywhere with it. But it is the daily candle, so we have until the end of the day to figure out what's going to happen here. If we can get somewhere it closes back up here, then we're starting to look really good. This right here, though, I'm iffy about it. There's your 4 hour. Coming off this swing high up here, we're making lower highs and lower lows. So, bearish market structure just off this December 3rd swing high up here. But this is the last, you had a lower low, lower high, lower low, lower high, lower low. So if we can at least get above this last lower high here at 129.05, well, that breaks this bearish market structure here. Now, it doesn't guarantee that it won't come back down further, but it does break this. If it were to go above that and then break down further, well, then we have a high, a low, and then we'll have the lower high and the lower low. A much bigger structure, right? But so far, off this December 3rd swing high here, this bearish market structure, the last lower high here on the 4 hours right there. So if we can at least get above that, things open up and go, okay, maybe that might be a low there. Until then, though, you want to be careful. And if we continue breaking down here, I mean, there's the bigger picture here, right? This was the swing low here, April 7th. We got a low volume node here we're trying to hold and break up at, but beyond that, we get to the high volume node at that low right there. Becomes a very real potential target. Down there about $96 or so, $95. If it continues breaking down further. But right now there's a chance, so we got to see if we can get follow through. But you have to get the follow through. You don't just blindly buy or blindly sell. Okay? So we'll see. But you don't have to know which way it's going to go. You just have to know where to look to put in a trade. You just have to know where to look to put in a trade. Stop thinking that trading just has to be this thing where you only go long in a bull market. Trading gives you ample opportunities. Again, not every day. Some days just aren't conducive to any real trading worth doing. Zoom out that bigger picture there, weekly. Again, just printing right now, we're just printing a diamond pattern. So consolidation into expansion, into potentially consolidation here. If we can get a rally, if we're getting a rally here, my first thought is a move up here toward, again, this resistance here. Up here around, 187. Maybe a little bit higher, and then a pullback, and then a breakout. If the low is going to be in here. If that low is going to be in there. So, my thought would be, if we were to rally from here, if that was going to be the low, we might see something like this. So again, you get your consolidation into your expansion, back into your consolidation, and then your breakout. And that's how diamond patterns work. They're the consolidation, expansion, consolidation. That's what they do. And you notice we're doing it right here around that previous all-time high there. But ultimately, even within this here, we're just within this range here, this first drop from back there in 21 into 22. We're just in that. Let me see here. Yeah, DXY. Yeah, remind me in a minute. Let me get through these charts I've got here, and then we'll do that. Silver keeps breaking out, right? So based on the height of this pullback, we've got a pattern target. See if I can find it here. Right up here around $69, $70. Based on the height of that pullback there. So that's the next target we're looking at there, right? But let's look at the difference. Look at the daily stochastic RSI on silver, which is on the bearish side of neutral here and been heading down, right? But look at the stochastic RSI here on gold on the daily. It's well overbought still. So gold kind of snuck out here and made a new all-time high yesterday and printed a doji right there on the R1 pivot. So here's what I'm looking at for gold. So based on the height of this pullback, that gives us a target up here around 4,700. Locally, if we can get rejected around here, the idea is that we'd probably pull back right here around 4,200 to 4,150. So we come up here, come down to here, and then we'd head out higher. And that would take us over 4,700. I mean, if we were to do that, let's just say from yesterday's all-time high, let's say we bring it down to 4,150 or so, that would actually give us a almost a 5160 target. But right now, easy pattern target right there, 4,700. If this breaks out and continues up, we'll continue looking there. But if we can get rejected here, the idea is we'd probably be pulling back to that 4,150 to 4,200 area before heading back out. Most likely. Yeah, those early charts on silver, yeah, that I posted back then. Andrew's mentioning this here. Y'all should come over and see Andrew's trades, man. He's got some great trades over there at TWC. But yeah, at first, originally, when we were back there around $11 or so, I was thinking we might get a pullback down towards $6. We didn't get that. We went the other way. So I changed what I was looking at and, said that we're probably hitting that all-time high, which we have now. But man, I wanted to bring up Andrew because Andrew started watching the AG chart. AG chart. And that was such a great chart. So yeah, if y'all haven't looked at that, take a look at that sometime. But Andrew's talking about that back when you were getting those really good pullbacks before rallying. So lots of good stuff there. TSLA, again, this is the one I told everybody, why aren't you long here back on August 6th? Around 300, 320, somewhere right around there. And of course, it's continued to break higher here. We just made another new all-time high up here at around almost 500. If I'm looking at the height of this pullback here, that gives us a pattern target of 530 and a half. So minimally, that's kind of where I'm looking at right now on that, if we can continue to get a breakout here and push higher. But, nice local target, potentially easy money if we can get that move. So just watch and see if we can do this and get this breakout here and head up. Coin is the other one. So that's Coinbase. So, again, here's my count on Coinbase. Yeah, so we've got this as a 1, 2, 3, 4. And I don't think this is 5. I think this is 1 and 2 of 5 of what we're finishing up here. So we're looking here. We could see this pull back a little bit further to 221 and 3/4 there at the monthly S1 pivot. That'd pull us right back, right around that area, maybe even dip below it to fill in this gap from over here on, move my little buttons I've got here. Right around May 13th, that gap up right there. We need a breakout above wave B to add confidence to this count. So we do need a breakout above. Where are you at there? 402.16. But if we get it, let's say we get the dip into that gap fill kind of thing, right? Just like that. And so what does that mean? Well, that means we have 5 waves up around $800, which, if I'm not mistaken, that's almost twice what it opened at, what it listed at, isn't it? Yeah. Yeah, we were about $400 here listed. So we get about up there. That's not a bad move from, 212 to 240 kind of area to get up there around $800, right? So, yeah, that's what I'm looking at there. Let me see here. You said DXY. DXY. Let me do dollar futures since it's got the volume on it. All right. So this is kind of what I had drawn on here before. See here, get through this all off here now. So yeah, so right now I'm kind of looking at the idea that this may be 1, 2, 3, 4, and you have 5 down here for like wave C, right? So this gets us, again, our move A down here, W, X, Y for B, and then trying to finish up this C, which would then get us down here. I got a 93.3 kind of target area if that falls through. That's based on the height of this pullback here, right? This biggest pullback here. Let me see here. This is the weekly. So let me see here. Let me zoom into the daily. Oh, what do we got here? Yeah, we just got just getting a bit of a bounce. That was a nice little candle right here on the daily. Almost a dragonfly doji there. Off here. Zoom in a little bit more. Four hour. Let me see. So obviously, we're getting rejected here at the weekly pivot. We get a spike of volume on that as well. If we lose support here, if we can get a close below this support, this swing low here at 98.16, that opens up a move down into this wick here, maybe around 97.20. But if we're losing this support down here at 97.82, that opens a real good possibility of sweeping the low down here, of heading down here, not just sweeping the low. If we're heading down here, that should mean overall that we continue lower down. Generally speaking, when it comes to pivots, if you're losing like on this, the monthly pivots here, which are on the daily time frame, we almost hit the S3 pivot there. That's usually not a good look. It usually signals continuation lower. But we are starting to get toward the end of the month. I don't know. Right now, we're just over halfway through the month, right? Yeah. Much worry for here. If we're going to keep going up here, I would look for resistance around this 98.75 area. Maybe even up here to 99. I would look for a rejection there if we continue up into that. But right now, we've just got as high as this support here, right? So again, if we look left, if we look at where we're at, low volume node here, often that's where we're looking to get rejections. Again, kind of bringing that across there, right? Very significant area of support and resistance on there, even if we kind of continue pulling it through here. Right here, right? And actually, it probably gets about halfway through the bodies of this one. Yeah. So very significant area of support resistance, low volume node there. Again, if we're going to get rejected and fall down below this swing low at 97.82, I think most likely we do continue heading lower there on that. And it continues pushing its way down here toward, the swing low, toward the demand structure in this wick on that low there. So right down into this area, if not a sweep of that low. So this would likely then become like a wave 3 still here. So especially if we get rejected, it'd be like like a 1, 2, and then a 1, 2, 3, 4, 5 gives us 3, will get us 4, and then we'll get 5 down here. But that would still be 5 down. We just look for 3 up, and then we'd look for it to break down further. I think and continue in this larger count here that we've got on here. So yeah, that's kind of what I'm looking for on the dollar. Everything's happened so far like it's been expected. Again, it was down here when we were at 89.90. when I gave that 114 to 115 target, which we then hit here. And then I said it looked like we'd be getting at least a 95, maybe lower. And so, again, we kind of bounced a little bit right here around the 100. Everybody thought it was over, and then it dropped back down again. And so right now we're still kind of just, again, bigger picture here. If we zoom out a bit to this weekly, where we got reject over here at this higher volume node, right? Again, resistance, support, 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 resistance all the way across, right? It's a significant area. If we can break out above that up here to 102 or something, then things start looking much more interesting. But I think while we stick down around this 100 or so right now, I think our bias should still be down toward the downside. And again, kind of hitting this target area will get us to this higher volume node here once we get through this. Right now, we're finding support on this highest of high volume nodes right here. So, on this whole chart here from back here in June of 2018, the most significant amount of volumes happened right around this $97 area or 97 point area. Second biggest part, almost about 104 there. But these low volume nodes, lack of interest in the market. Market's not really interested here. Not a whole lot of volume getting, happening on those price levels. So, again, as you push up into it, it works as resistance because there's just nobody really interested in price at that level. However, people interested right here. So if we can drop down below that, opens up another low volume node into another higher volume node here. So yeah, let me see here. Andrew mentioned back there at TWC in the Trading Academy, says the AG post, February 26th is when we posted the entries. Price was around 580. The wave 3 target around $18. And look at it now. It's been good, right? Let me see here. CDE looks good. CDE. I'll look at that real quick here. What's today? 19th? I don't know why I put 12 there. Try again. And you said CDE. Let's find out. Oh yeah, look, that's nice. That's a nice move. That's what you like to see right here. I like the pullback. I like the reset. This is the weekly time frame. Let me see here. Let me try and figure out where we're at. Yeah, that could be a 3 there. Pullback. 50% secondary wave 4 target. So yeah, I mean, just real quickly, if I'm looking at this, to me, and again, this is just a real quick look here, but that looks like, stupid thing. Oh my God, let me try again. This could be a 1, 2, 3, 4, get us a 5 here, which would give us, let me kind of zoom in a little bit. That would give us a pattern target of around almost $30 right there. Let me zoom in a little bit more though. Where is the low? It is this. Yeah, that was a nice spring on this local range right here. Jump across the creek, back up the edge of the creek, rallied up, pull back, breaking out now. Yeah, I think 29.90 or so is a pretty good target from here. as far as the next move up. Yeah, I like where we are on the monthly here as well. We're out up into the R1 pivot. Yeah, I don't hate that at all. I like it. I like the setup there. It's a long-term hold for you. When did you get in? If you don't mind sharing. If you want a good one, check mRNA on the weekly. Is that Moderna? Let's see here. Oh no. What was it? mRNA. Ugh. Let's well, that went up, I guess. Shoot. Nice little 4-hour candle right now, but you said weekly. We dipped a little bit further here. Let's see what we got going on here. Okay, I can get rid of stuff. Yeah, I like this setup at the moment here. Probably right there. Looks like we got a spring right down here. Then we get this nice move up. We're getting some big candles starting to show up here on the weekly. And of course, look where it bounces right there at the high volume node. Kind of bring this across there, right there in that range. I mean, it makes all the sense in the world. It's where you would look for it to bounce at least. You kind of zoom into the monthly here. Such a big drop there. But that monthly is just kind of getting going. Yeah, if we can kind of clear this $44 area, $45 area, I don't see any reason why we can't jump over here to this next support resistance around 65. But we do have a gap up here around 115. But I think as far as the big picture goes, I think if you're going to see this as a 1 and a 2, you've got like your wave B right here, which for that big picture you want to get above, and then that should say, okay, we got an all-time high coming, getting past that 170.5 area there. That's a nice monthly candle. Forget the weekly. Look at the monthly there, Andrew. And so we had this descending channel here, rejected, as we kind of made this channel across the range, breaking out back into it. I mean, so I would look initially at the, on your charts, just draw that descending channel, and I'd look at the EQ of the descending channel. And if you can get an impulsive breakout and close above that on the daily or weekly, I think you look up toward the range resistance up there. I think it's probably the easiest way to trade it. But like I said, if this low sticks here, we break out above 170.5. I think we're headed up to new all-time highs. So maybe a good one to really kind of watch here. Nice catch, man. You bought it late 24 for CDE. Oh man, I think you got a good buy in that, didn't you? Yeah, you were over here. Nice, nice. So you got it here when it was doing this sideways thing. So it probably pulled back against you a little bit, maybe had you question yourself a bit, right? But you held, and then it rallied up nicely. I like that. I like that for a lot. And so, just this right here is 5 up would be, 1, 2, 3, and we get a 4 on the pullback, and then we get a 5 up from that as well here. Which would also then be this 1, 2, it looks like. So yeah, I mean, this has been great movement. Um, once we got this dip back here, we hit a few times here, here, and here. That's been a nice move off that. Nice chart. And we're almost at that all-time high, aren't we? Oh no, okay, it's got further to go there. Let me jump out to the monthly here real quick. The monthly, I like these resistances all here and that breakout through them. I think it's coming right around where it's at. Oh yeah, look how beautiful that is. I don't know if you looked at this, Zeb, but look at how nicely this sets up here, 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 multiple times through here, and then you get your big candle breakout above that. That's what you like to see. So let me put this up here. But you like to see these big candles popping up through there. And then very little pullback and more big candles up. Pull back a bit more, trying to head back up. Look at that month. Look at last month's candle. Little hammer candle on that 2-month pullback here. Hammer candle here. Hammer candle starting to print for this month. But definitely liking it. Yeah, look at where it stopped. No surprise where it stopped at all. Check this out. Can I grab this right here? Look at that. Everybody thinks price action is random, but it's not random, right? Look at that. It's absolutely exactly where you would expect it to find support or a resistance, right? That next target up at that 29.92 area, right about, let me see if I can get it here. I'll get it close. Look at that. That's the target area. Surprise. Support resistance. See what I'm telling you guys? It's simple. Trading is simple. It's just not easy. Look where it pulled back to. I mean, is it surprising where it rallied into, where it was rejected, where it found support, and where the next target is? When we look at the structure on the larger time frames, it's not surprising at all, right? It's not even surprising a little bit. Can the market do new all-time highs without NVIDIA? Sure. Sure. I don't think it will, but sure it could. Yeah. So here's the thing to think about, right? And I've tried talking about this multiple times throughout the years. But your small caps, you know, your Russell 2000, that's what you kind of want to watch, right? If you think it's the end of a cycle and the small caps are breaking out, it's probably not. Because the small caps, those companies are most rate sensitive. They're also most sensitive to what's going on in the economy. So everybody can say, oh, the economy's terrible, the economy's this and that. But again, most of what you're getting from that are just people talking about their biases online, right? Because what happens is those companies that are in the Russell 2000, the small caps, like I said, they're going to be much more affected by interest rates, by the economy, by what's going on. So if they're going up, there's a belief that the economy isn't like everybody's saying. If everybody's saying the economy's terrible, you know, at least to some extent, right? And so when you see that the small caps are breaking out new all-time highs like they've been doing, you know, until they're doing substantially the other thing, you should be more on the side that there's further upside still to go versus the top is in. What does that mean for Bitcoin and crypto? Well, again, if we've got that going up, you know, that's the environment for you know, people to put money into riskier assets. And so often you'll see if IWM is going up, you'll see that that Bitcoin a lot of times is going up with it. Now, this isn't a one-to-one all the time kind of thing, but, again, generally speaking, you're looking at things to say, okay, are people actually going to be putting money into the markets or not? And the IWM, for instance, the RUT making, new all-time highs is a pretty good indication. Okay. All right. Well, I appreciate y'all spending some time here with me. I hope I've provided value. I hope most especially, not the charts, but what I was talking about at the beginning. Most people are going to ignore that. Most people are going to be bored with that. Most people are going to be like, whatever. And most people are going to lose all their money in the market. So if you want to do better than what 99% of the people are doing, you have to do what they're not doing. Stop doing what they are doing. Stop. I know it's comfortable to be in a herd. It feels safe to be in a herd. But the herd is only right in the middle of a trend. They're never right at the end or the beginning of a trend. Okay? So you got to think beyond that. You got to get beyond that. If you guys would like to join us, we'd love to have you at members.texaswestcapital.com. Follow me at TX West Capital on X. I'm going to release a few things here probably this weekend, today and this weekend. Instructionals on how to reset, on how to be better traders. The real stuff that matters, not the trashy nonsense you're getting from pretty much everybody else on X and whatever. Stuff that really is going to be helpful for you as a trader. So sure look for that. All right. Do me a favor, hit the thumbs up, hit the like, subscribe to the channel. Like I said, follow me, share the link. I would appreciate that. As always, remember the only thing you control is how much you lose. So please keep working on that risk management. I hope y'all have an amazing weekend. Don't forget, next week is Christmas. So if I don't talk to some of you before then, I hope you have a really joyous time. Even if you don't celebrate Christmas, listen, folks, even if you don't celebrate Christmas, that doesn't mean you can't have, a fantastic time and a really joyous time with family and whatnot during that period, right? I'm going to tell you what, as somebody that's 51 years old, I'm going to tell you, use any opportunity you get to spend time with your family and enjoy them. Tomorrow's not promised. So do what you can to make days happier for them. All right. Y'all take care.
Trading tip: always manage risk before chasing gains.